I don't think there's any doubt that we're in a precious metals bull market. People say, well, I'm going to get involved, but when there's confirmation. Well, there's confirmation. Um, Precious metals bull markets always start with the fear buyer. They always start with physical precious metals. When you and I first really started visiting consistently was 2023. And there was a lot of skepticism presented by your listeners saying gold is moving, but the gold stocks aren't moving. Why is that? Well, there were two reasons. Gold was moving because foreign central banks were buying it. And foreign central banks don't buy gold stocks. So an asset class that had buyers was going up, and an asset class that didn't wasn't going up. Gold stocks don't move until the increase in the selling price of their product generates greater free cash flow margins. Free cash flow margins are exploding at the big companies, and hence their share prices are exploding. This is indicative of the fact that we're only 25 or 30% of the way through the precious metals bull market. It's important that people understand that. But you don't have to wait for it to start to occur because it's occurring right in front of you in real time. What happens is that as the biggest and the best companies attract premium valuations relative to the rest of the sector, value investors, myself included, begin to go farther down the quality trail looking for valuation discrepancies. And if the valuation discrepancies don't get arbitraged away by investors like myself, the big companies with a lower cost of capital take over the little companies. That's what happens. And we're going to see that.
We are seeing that.
I happen to believe, because of the arithmetic that you and I have described around the deterioration of the purchasing power of the US dollar, that this gold bull market has much longer legs than people think it does. When I ask myself what will cause me to sell gold, it'll be when the reasons to sell gold go away. When we have a political solution to $100 trillion in off-balance sheet liabilities, Social Security, Medicare, Medicaid. When we have a balanced budget. When we have a positive real interest rate. I believe that the best prologue to what we're looking at right now is the decade of the 1970s. In the decade of the 1970s, the US dollar lost 75% of its purchasing power, and the gold price went up 30-fold. I think over the next 10 years, the US dollar is going to lose 75% of its purchasing power again. The gold price is already up 12-fold since the year 2000, so I don't think a 30-fold increase is in the offing. But it wouldn't surprise me at all to see the nominal gold price increase in a fashion that mirrors the deterioration in the purchasing power of the US dollar. If that does happen, the bull market that we're in now is going to be one for the record books. Truly one for the record books. By the way, I hope I'm wrong about the deterioration of the purchasing power of the US dollar. I really hope that young people don't go through the reckoning that we went through in the decade of the 1970s. It was ugly. High unemployment, high interest rates, the so-called misery index was ugly. I just don't believe that you can endure the profligacy that our society has endured in the period 1982 to 2022 without a reckoning. I don't understand how the math works.
Right.
So although I hope I'm wrong, I think I'm right. And if I'm right, judicious investments in precious metals and natural resources should hold somebody in very, very, very good stead through the next 10 years.
Yeah. Use the word a lot, hope, and I hope you're wrong as well, but I don't think you're wrong. I learned something from the great Jim Rogers. He once told me hope is a terrible strategy to have.
Yep.
You don't invest on hope. Talk to me about one sector, and I have a sector in mind, but I want to see what you have to say. And some of these companies were represented at the conference. One sector that you really, really like, and one of them that I was told, and who was it? Is one of the titans there told me. But anyways, what's one sector that you really like here that is somewhat not being discovered or known yet, or you think has much higher to go other than gold?
The sector that I'm making the allocations to is not a commodity sector. I'm attracted to deposits that are held by juniors that have 15 to $20 billion in situ recoverable reserves, irrespective of the commodity, where uh, usually the commodity's out of favor. Usually it's in a country that people are uncomfortable with. Usually it's 4 or 5 years away from production, which is to say a tier one deposit that has no bids. That's what I love. Uh, I have a lot of money invested in very high quality resource stocks. And I don't need to make 10 baggers or 20 baggers or 30 baggers, but I like it. And so a tier one deposit is defined by me as a deposit with at least $10 billion in situ recoverable reserves and resources at today's commodity price. But I'm greedy, so I prefer 20 billion to 10 billion. It's a deposit that you think, were it put in production today, would be in the best cost quartile worldwide in the commodity that it produces, and in the best quartile worldwide in terms of return on capital employed, but at least 25%. That's really, really, really the crux of what I'm doing with my own money right now. There is an Australian listed company that has an amazing mineral sands deposit in Malawi. It would be the first or second largest rutile deposit in the world, probably the largest graphite deposit in the world. You know, people say, rutile, graphite, I want gold, I want copper. Malawi, I can't spell Malawi. You know, this is going to take forever. I want to make the money by Thanksgiving, you know? Uh, so I like that sort of thing. There's a different company that has a sulfide nickel deposit. People hate sulfide nickel because the laterites are so cheap. In Brazil, they don't like that, I guess, because the people are brown or speak Portuguese or something. Again, $20 billion in situ recoverable reserves and resources. A separate company exploring in Brazil with a large PGM deposit. It was cheaper last year. PGMs are up. With the overprint of what might be an iron oxide copper gold discovery. The fourth is a rare earths company, Australian listed company, which is also in Brazil. The sector that I love are companies with large resources that are hated. Hated.
Yep. So I was going to ask you, is there a jurisdiction you wouldn't go to? Because you're saying your places that are out of favor, if you would. But I think a better question is, you listed or you talked about, and I know some of these companies you're talking about, I think I know them, but you mentioned a couple of Australian companies.
Yep.
Do you see money flowing more? And this is a different question, money flowing more to Australian companies as opposed to Vancouver companies because of regulations or just because of the way they're set up? And I've heard other parts. Go ahead.
The Australian equity markets were starved for capital for 25 years compared to the Canadian markets. The consequence of that is that the Australian geos, the Australian promoters, were more attracted to the concept of using capital markets to make discoveries, while the Canadians were more attracted to promotion, using stories to mine the capital markets. There was a much more direct relationship between rocks and money in Australia. So I would suggest that there was a better corporate culture among the juniors. There is an unfortunate tendency among Australians, which is declining, to be extremely xenophobic. In bad markets, the Australian investor seems to regard everybody who lives outside of Australia, even if they live in New Zealand, as a wog, you know? And so they sell off in bear markets non-Australian assets with reckless abandon. So for 40 years in bear markets, I've always looked for high-quality Australian juniors that attract hate in their home market. It makes perfect sense that Australian companies would be less attractive to North American investors than Canadian companies because we've been schooled to look at Canadian companies.
Mhm.
It also makes perfect sense that Australian companies that have assets that are domiciled in Malawi or Brazil would be less attractive both to American investors and to Australian investors. So it's important to understand the origin of the apathy around the issuer. To me, all of those negatives are positives because they explain to me why a stock is cheap. It's not that I'm making a valuation error. It's that the market is very inefficient at stories that aren't wrapped up in a way that's convenient to the listener.